Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 6th of February. So we've seen a very big action-packed week of world indice moves and some of the currency moves as well, especially Bitcoin, which we'll have a look at. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see we obviously had a weakish sort of end to the week. Well, we've still got a little bit more to go, but you can see that the last session has been a pretty ordinary one. I'll zoom it right out. We hit the 70, almost 71 the other day. Had a little bit of a reversal here, but it failed to make a new high, and it's always a big telltale sign. We always talk about that when we're looking at previous highs. If it fails to make that previous high, and we start to see weakness, especially when it's actually at a reasonable sort of resistance level, which the 70-cent mark is, it generally does mean a little bit of weakness. And the 20 moving average was the target for this one, if we are going to look at it from a short perspective, because it's been respecting it all the way up, of course, and that 68, sort of 80-ish area, where that was basically a level not so much in the recent history, but it has been very important in the past, would be our next parking spot. And you can see it's well on the way now. You can start to see that even though today's session's obviously flat, it's only just started, you can see that we've got a pretty big sell-off here. And realistically, you would think that there's about 40 or 50 pips there, with a little bit more potential on the way down, if we continue to see lower highs and lower lows on the smaller time frames, which we generally, I'll have to zoom it right out to actually see this one, because the moves have been pretty extreme. Let's have a look. I'll bring it down for you. You can see they are there, but you've got to zoom it right out to see it. Okay, so they're the things that we talk about each and every week, as you know. Lower high, lower lows. They're only just lower highs and only just lower lows, but they've been relatively easy to trade when you knew that the bigger time frame was looking a little bit weak. That's the important part. You've got to understand where the previous bigger time frames are. And we knew obviously that was going to be a potential sell when we saw the indecision candle and it started to trade underneath. Once we broke this level here, which is the previous day's range, that is your target to start looking at the shorts. And we had a few decent opportunities there. So look, continued selling probably on the agenda for the Aussie, especially if the lower high, lower lows continue. But of course, the upside is 70 cents in my mind. If we start to see a series of higher highs and higher lows on a smaller time frame like the 15-minute, I'd be looking at the 70-cent mark as the next target. All right, dollar index. The all-important dollar index has been recovering quite well over the last couple of weeks now. You can see we're at a place now where 98 is a resistance zone for it. There's no question about that. We've got a lot of price action right through here. You don't have to go very far back to see where all of the action is. But, we've obviously got it was support there. It was support there. They were quite big reversals. And we had many, many days of, going through that level and touching it through there. So really, really important to understand why this level is a potential resistance point. But there is enough momentum to kick in at the moment. The 20 moving average was respected. You can see that there. But right now, if it's going to fail, this is the area it's going to fail. It's a 61.8 pullback of that entire move. So if you drew a fib there, that would be around the 61.8. So also another important factor to put in, that if it is going to reverse, this is the area it is going to start looking at going short. But there is a lot of momentum, and the fact that there's so much going on with the rest of the world indices and things like that, I wouldn't be banking on this one shorting. So I'd be certainly waiting. I wouldn't be preempting the sell-off. I'd be waiting for it to actually do it. In terms of a turnaround, at least, see a momentum shift, a series of lower highs and lower lows, and if we get that, then we can start looking at the moves back down to the previous lows around 96. But if it doesn't get that reversal, look for opportunities to take it back up to that 99.80 and this area here. This is probably the area we'd be looking for, 99.60 in the first instance, and then 99.80 after that. So they're the two levels that I'd be looking at on the dollar index. Big moves. The S&P 500, massive sell-off last night. You can see, look, if the writing has been on the wall for a little while now, we can see that the higher highs that it was making were under duress. We had MACD divergence. We knew that. We've been talking about this double top here for a little bit now. There's no question it's a double top with divergence. It's bearish class B divergence there on the MACD, which is always a good sign. We know that. This is the point, that 67.50. We know that's a very, very important zone. We've talked about it to death over the last few weeks. So if it's going to hold up, this is the area that you're probably going to find support. If it doesn't hold at this level and breaks through there, I would be thinking probably 65.20 to 65.30 would be the next target for this one. So some reasonable selling at this point here if we get a break. Whether we get support or not, look, well, we don't know for sure. This is obviously a role reversal zone. It was resistance there, and it's been support 3 times. I think we are on the verge of getting a moving average cross. If we don't arrest this selling over the next few days, the 20 and the 50 are going to cross. They haven't actually crossed since price was way back at 5,800. So the last cross was down here. We've seen some very significant crosses over the last little bit. And this is probably going to be one of them too, if nothing changes quickly. So you can see that the price at the last cross was around 5,800, a long way away from where we are now. Okay, so nearly 1,000 points. So it's been a fantastic run. Is this the end of it? I guess we're soon going to find out. But realistically, the writing was on the wall. We've been warning basically for the last few weeks that you wouldn't be looking long in any way, shape or form. And short trades were the way to go. If you're looking at it, doesn't mean that it's going to necessarily sell off terribly. But the support levels underneath is where we're looking. And 67.50 is one of those prime examples. Really, really good opportunity there. Look for support here. If we see a series of higher highs and higher lows at this level, look for a move back up to the moving averages. If we get a break below there, especially in the next session, I'd be starting to target that 65.50 because that's probably the next very heavy support zone from there. We'll have a look at oil as well. And oil is one of those ones that it's been playing the game nicely from a technical standpoint in terms of moves up and down. Hit the 65.90 to 70 or 67. 66 it got to there. 65.80 to 66 was the target. Obviously hit it. It's been there for a little while. We knew we had a roll reversal zone there, though. A lot of people picked that up, which is really, really good. Good to see people getting into these trades that we're talking about each and every week. That was a great opportunity. We've seen a little bit of weakness now in the last little bit. Again, similar to the Aussie USD. It made that high, which we know was resistance. Then it came back, tested the 20, which is a great trade. Then it pushes itself back up to the 65.60, but not really actually receiving the luxury of actually breaking through. We found that resistance right there again. So once it got there, it's obviously weakened a little bit. It's only been 2 days of apparent weakness, so we'll give it the benefit of the doubt. As long as it's trading above the 20 moving average, I think we can still be a bit buoyant on oil. But if it breaks down past the 20 moving average, we'll be looking back at these lows at around that 60 to 60.50 mark. That would be the 2 targets I'd be aiming for on the lows there. So just be mindful of that. If it's trading above the 20, look for opportunities back to the previous high here at 65.90 to 66. So I'd be setting my zones between the 20 moving average and that 66 cent mark if you're going to trade intraday. And just look for small trends inside that tight zone is the way to play that one. Pretty good on oil. And Bitcoin is the one that everyone has been talking about. Look, I did a stream on this earlier this week when it was still in the stages of looking like it was going to sell. We set up our 62 and 64 markers, thinking that if it was going to continue, that was where it was going to go. If it broke past 72, and there it was, hit 70, hit the 62. In that session, still trading underneath really. So it hit both targets pretty aggressively. Actually, I would be looking at that, thinking to myself, that is. If it's going to stop and take a pause, this is the area it's going to take a pause at now, because this is a really, really big. You've got to go out a long way to actually even find this support. Like you can go out to a weekly, you'll see it. You can see here that the 72 is very strong. It had about 3 touches before it actually finally broke through. But as you can see, there's a lot more touches here at that 64 to 62 mark. Very, very important zone. Obviously, that was resistance at this point here. As you can see, these 2 peaks reversed a very, very big aggressive trend on the way up, and it's already trading past that. And it is a real big concern for it. There's no question about that. I'm reluctant to get in on it, even on a long, because it can be very, very volatile, and we don't really know where it can stop. It broke through 72 a little bit too easily for mine. And when it's doing that, you've got to be very, very cautious that selling might just continue. It's one of those ones that could, you know, it could be at 52 next week and no one would even be surprised. So I may be horrified, but, no, but not totally surprised. So I think that it's one to watch. If we start to see a series of higher highs over a series of days, that would give me a bit more confidence to trade it back up to the 72. I think that would be the main target for it, if we can get up to that 72 again. But it needs to do a series of higher highs and higher lows from this base on at least a 1 hour time frame to convince me. If it doesn't do it in at least a 1 hour, I'd be too nervous that the selling might continue. So probably keep an eye on it, but I think wait for a turnaround in the trend on at least a 1 hour time frame before you start attempting longs on it, and 72 would be the first target I'd be going for. And on the lower side, around that 52 if it continues to sell, if the lower highs and lower lows continue to push down. So I hope you've had a great week's trading. We've seen some massive moves, but all the levels that we've set have been hit, which is fantastic. So hopefully you're able to take part in some of those, because it's good to see the market finally starting to rock and roll. So have a fantastic weekend. I look forward to seeing you all next week.